Another way that family can help first home buyers get into the market is by way of a family guarantee. With this option, the family don't need cash or savings to contribute towards the first home buyer's purchase. Instead, they use a property they own as a security, in this case a second security, for the loan that the first home buyers are going to take. The best way to illustrate all of this is with an example. So let's dive into that. A couple came to see me recently, and when we looked at their income and their commitments, we could see that their maximum borrowing power was around $1 million. On top of this, they had around $125,000 in savings. Now, when we put these numbers into the calculators, what we found was that even though they had the ability to afford $1 million loan, the maximum that banks were prepared to lend was going to be far less. In fact, they could buy a property for up to about $850,000, which once on costs were added meant that they needed $925,000. This $75,000 of costs included around $25,000 worth of mortgage insurance. So once they took off their savings of $125,000, the couple needed to borrow $800,000, which was close to 95% of the purchase price. What was holding them back from being able to borrow more and buy for a higher price was in fact their savings. So they went and had a chat to their family, and the situation was then able to be reworked based on using a family guarantee. And this is how the numbers changed. The family offered a property that they have, which is worth over $1 million, as the second security for the loan. So now we rework the numbers. With $1 million loan and $125,000 that the first home buyers have in savings, they could buy for a total cost of $1.125. This meant they could buy a property for up to $1,060,000, with $65,000 being required to cover stamp duty and government fees. So with the help of family, the couple are now able to reach a purchase price of just over $200,000 more. But you need to understand how this is then presented and structured. The couple can borrow up to 80% of the price of the property they buy, secured against that property. So that works out to be a loan of $848,000. The remaining amount that they need, which is $152,000, is secured against the property that they're buying, but more importantly, the parent's property. This way, all lending sits at under 80% of the value of the securities against which the lending is secured. It means that no mortgage insurance is payable. So you can see from this example how use of a family guarantee can help first home buyers get into the market sooner because they don't even need savings, and that the parents can help without needing to have cash or savings. Borrowing at under 80% also means more favourable lending policies and usually better interest rates. Just before I wrap up, a couple of things to note. The first home guarantee is extremely powerful, but one thing it doesn't do is allow first home buyers to borrow more than what they can afford on their own incomes. With the guarantee, first home buyers are able to lean on the assets of the parents, but not their income. The other point I want to make is that if the first home buyers default on their loan repayments, this puts the parents' property at risk, and it may need to be sold to help clear the debts. This risk is greatly magnified if the security that the parents offered was their family home rather than an investment property. So it is important to consider this option carefully before proceeding, and I only recommend it where family members have strong, open relationships and there is a high degree of trust between all involved. I hope you found this tip useful. Follow for more. I'm Tim Gasper, founder of Hatch Financial Services, helping first home buyers to hatch their future.